Let's go.
Hello, guys. Hope you're doing fine. I'm with Pierre today, and
Hello,
we
guys and girls.
and we are going through our usual routine of the weekly live stream analysis. So at Eat My Chart, this is what we do every Sunday night, Paris time. At 9:30, we decide to actually erase everything from our charts. Okay, so it's the ninth time we do it, and we erase everything from our charts. Okay, and all the indicators, all the drawings, everything. And the idea is to redo everything from scratch, so you guys can actually learn how to do technical analysis properly. So from daily pivots to volume levels to any kind of technical tools that we actually use. Okay. And then once we have everything that's set and done, we try to find those areas of confluence, those very juicy areas where we feel would offer the best opportunities, the best trade setup for the week. And yeah, so far I think it's working pretty well. Usually we're pretty on the spot when we talk about those trade setups. And yeah, we also have this part where we go to the stock market. As you may know, the stock market is very, very correlated to Bitcoin price action. So usually when you see a pump on the stock market, you can see the same thing happening on Bitcoin. And if you see a dump, it's quite the opposite on Bitcoin, also dumps. So you always need to have this eye on the S&P, on the stock market, the American stock market, because it really gives you this edge on the market, especially for people who don't know that. And at the end, if you guys
Yeah.
have any kind of questions, just ask them, and we'll cover them at the end of the session. Okay. Just before we start, this quick legal disclaimer. So take a moment to read it. I'm going to remove myself from here so you can read it properly. And yeah, the idea of this trading disclaimer is clearly to make sure that you trade your own setup, that you understand that trading is a very risky business. Okay, it's not something that is to be recommended to newer traders or to people that are amateurs in this field. You really need to start trading with paper money. Everything we give you as possible setups or indications are not financial advice. Okay, it's yeah, really for you guys to know that. So I guess we can start. So let's go to our last chart that we had on Bitcoin. Can you see my screen properly?
I can.
Yeah. Okay.
Yeah. Even on the Twitch is perfect right now.
Okay. Great. So we stopped there last week. Okay, it was Sunday 22nd of Jan. Yeah, so we were ranging in this area, the top being the monthly level. The low that was being put in at the time, let me see if we have something here. No, I didn't delete anything. Okay, so at the moment, yeah, at this moment, we didn't really have any kind of specific low other than the low that was put in the range. So we had, let's say, the range lows here, and you had the high of the monthly. And we had multiple setups in mind. We had long setups, okay, a bit lower, should the price start dumping. So the idea behind those long setups or even the short setups is not saying we know that where the price is going. It's just that in case the price goes into those interesting areas, we will be in front of the computer and we will be judging the reaction to see if yes or no we enter a setup. So we had those three areas that we were expecting, okay? And on the top side, we have this trade setup that's a bit above us, the weekly and the naked weekly pointer control, or the swing failure pattern of the high of this range that was put in August 2022. Yeah. So let's speed up a bit the chart to see what happened. Okay. Let's do it maybe on the 4 hours. Wait a second. Okay. So as you can see, we kept on ranging, right? Okay, and what happened next? Or I mean now at least, is that so we broke this range to the upside. So we haven't hit any of our long setups yet because we did not break to the lower side. So the bearish scenario did not play so far. But keep in mind that we're breaking during a weekend price action. Weekend price action, low volume, meaning that not all the participants agree with the direction that the trend has been going on through the weekend, and it could completely reverse at the opening of the week. So you have to take this, you have to factor this in your trading system. It's to understand that this move might be faded as soon as the S&P futures open later today, okay? And we hit our first, let's say, area of resistance, our first short setup that we had in mind, okay? Now the entry was a bit above at the weekly level, but you could start laddering because we hit this level, or at least we front run it. Let me remove this box of resistance. You can see that we front run it, okay? Not a lot. Let's see here. Yeah, talking about less than 0.1%. For me, it's a front run that could be counted as a touch. And already you can see some kind of a reaction. Now, the reaction itself is okay. It's let's see from here. Yeah, you had almost a 1% reaction. It's not bad, but this reaction doesn't mean that the uptrend is invalidated even locally. Okay, it's a regular rejection that you should expect. Now, should you take the trade? Myself, I took it as soon as we hit it, I saw the rejection. I entered a very scalp short trade. Okay, I took profit at 0.7% because I was not really sure whether the uptrend is going to be stronger or not, and it's a very aggressive entry. So I want to make sure that the fees are covered. Now the stop loss is at entry. If during the stream I get stopped out of this trade, nothing is lost, and if it drops, I'm actually covered. So that was a very scalp, short setup. And the idea was to make sure that you cover yourself should start dropping. But the real setup for me would be a bit above at this weekly horizontal level at 24,300, 24,300-ish. Because it's a weekly level, we know that those levels are pretty much well respected. It's above it. And should you reclaim it, well, I think the next level that you have in mind is the swing failure pattern of the 25K. Okay, but right now we're here. So what do we do now? I suggest we erase everything from our charts. So let's do it. I'm removing everything. Okay, I'm keeping the setups because that way we can trace them. Okay, and this is basically what we're left on. So as usual, as we do every single week, you go through the higher time frame. Okay, so here we're on the monthly level, and you try to see whether you have new possible pivots that arises. So on the monthly one, we can see we're almost sure that we're going to have a monthly level that's going to be created here. Now, why do I say this? Because the month is not over yet. We're the 29th of Jan, so we still have 2 days. Okay, we could see a drop now in the next 2 days of 31%, but let's say that the odds are pretty in our favor to say that this is going to be a monthly level. In 2 days, we're going to open a new monthly candle, so somewhere around this area. Should we start pumping, it's going to be higher or lower, but we're going to be opening a new monthly candle here, creating then this pivot here, okay, at 16,529. And I know for a fact that 16,500 is a big support area. We had a range below, we had volume levels around it, we had naked points of controls and things like that. So this pivot
insane
here,
level.
Exactly. This
insane
pivot,
level.
the fact that we're going to be adding a monthly level at this moment is in this area is very interesting. Okay, so we have to monitor this, but of course we're not there, but it's interesting to mark it down. Now the other monthly that we went through, and actually we went through two monthlies recently. It's this one right there. Okay, so the 2484, and you had another one above it, the 23,301, and we are above both of them. So that should tell you something. That should tell you that, first of all, you can see on the monthly level that this green candle is pretty strong. It's engulfing all the previous red candle. Now the wick is above it, but the month is not over. You don't know if we're going to be opening higher than that, but so far it's a pretty strong move, okay? Especially if you count the fact that we're in a downtrend since 69K. Now, this doesn't mean that this is the sign to tell you, okay, I have to buy now. No, but it's starting to giving you like some signals that, okay, this could turn out to be a potential pump that could go back up into this previous range here, and you can see a rise of maybe towards this next monthly level of 92% should the trend stay intact. And so far, the trend isn't, at least on the monthly level, this is super strong right now, right? It's a very, very bullish candle. So we have this monthly that's been trading through this one as well. So we're going to remove this one. This monthly is traded through. I'm going to keep it because it's the highest monthly that we have in this area, but usually I would remove it. Okay, it doesn't mean that I'm going to trade this monthly. I just like to know where the price is compared to it, especially if we see some kind of a back test. I want to know that this was a monthly level resistance that was respected, and now it's acting as a support. So I want to have this level in my chart. 45K 500 is the next monthly to the upside. Okay, and then we have one here. Do you want to say something, Pierre? I'm hearing your mic.
No.
Okay.
Everything's
perfect. But I mean, yeah, just if you have something to say, just, yeah, you don't need me. Just take the mic.
Yeah.
Okay. So
yeah, the monthly is important. Also to note that we have 3 days left until the end of the month, so we will have a new monthly soon.
Exactly. It's gonna close. It's gonna close soon, so we're gonna have a level here. But I mean, so far, just with the monthly levels, what we are seeing is that this is a strong move, and we're creating a nice support below. Okay, so that's pretty cool to see. Let's put all those levels into the monthly folder. Okay. I will just add a little mention to this one, which is traded through. Because I don't want to consider it as an untapped monthly level. Okay, usually I just keep the levels that are untapped because they provide the nicest reaction. Okay, and so now it's cool to have this information. On the weekly side, what do we have? On the weekly time frame, so we're approaching the next weekly resistance, which is above us right there. Okay, so let's put it in. Weekly level. We go down. We have a new weekly level that was formed quite 3 weeks ago. Okay, so look at that. This one is at 16,600. Yeah, so it's basically aligned with this monthly level that we're talking about. So this is going to be a very strong support. We can see it from now. Do we have something lower? No, we don't. Do we have something higher? Yes, we do. And that would be the next weekly level. Okay. Is it interesting to mark this one? No, because it's tapped. The next one would be here at 50K. We are far away from that. Yeah. 50K, you're talking about 115%. So I doubt we're going to see this in the next week. So let's keep it simple. 3 weekly levels here. Let's put, just for the sake of putting a weekly level below, let's put this one here. Okay. And I think it's also aligned with another monthly level. Yeah. Okay, that's interesting. And this one as well. Okay, that's cool. But again, I mean, we're here. There's no point in thinking we're going to 10,000 when we're at 23,800, basically. So, again, we can have the same reaction, which is we had a weekly resistance here. We went through it. Weekly resistance here. We went through it. So even on the weekly time frame, which is logical. I mean, if on the higher time frame we're showing some strength, it means that on the lower time frame, you had the strength also to break out those levels. You had 2 weekly resistance that we went straight above. Okay. And that is a very strong move. It is. I mean, look at that. 1, 2, 3, 4. We have 4 green weekly candles in a row. Okay. It is starting to look like some kind of a bullish price action. Oh, my bad. I removed the bad ones. Yeah. I'm just going to remove this one and this one. And I'm going to keep the most important ones, which are here. Okay. weekly. Okay, good. So let's hide this. Now, should we go on the daily? Let's go on the daily now, and then we will start pulling some fixed range pulls and things like that. I'm also going to remove all my alerts. It's kind of annoying me. Yes, this thing here. Oh, okay, great. Great. So, what do we have in terms of daily levels? Well, in terms of daily levels, now we have some daily levels that are interesting. So the same thing here, you can see that you had a daily level here that was interesting, right? Can you see it? And this daily level, this daily pivot, created by the fact that we opened here and the 5th of November, we opened here, we went here, we closed, we opened the candle 6th of November here, and then we dropped, creating here a daily pivot that was not tested before. Look at the reaction of this daily level. Was it also the weekly? No, it wasn't. Okay. The reaction of this daily level is crazy. I mean, it stopped. It basically was the pit stop of this whole move, of a 30% move up. Where did you stop? At this daily level. Those levels are very well respected. It was also an important high. Why? Because we were dropping. And at the time we knew that, so we were here, okay, and we were saying, should we start rising? So of course this is going to be an important high. The next key high is going to be this level, and it was a very important high. Look at how many times we wicked above it before finally breaking through it. That was a big resistance, okay? It didn't sound like it because now we're above it, but you can trust me when I say that this was a level with friction. And should the bulls not have enough strength to break the level, we would have rejected from this pretty heavily. But the bulls were here and they want to see the price go higher, and this is what we did eventually. So let's remove this daily level. It has been traded through. This one has been traded through as well. And just also look at something very, very interesting. I know I'm taking a bit more time today, is that we break through it, right? And what does it become? It becomes the perfect support. This is the exact reaction that you like to see when you want to see a support resistance flip or resistance support flip. You break through the level and then look at that. It becomes the perfect support before going higher. Okay, but this one as well was reclaimed. So a very strong move. This is what we can say. Above us here, we don't have any daily level. So we broke above every single daily levels. Now, below us, what do we have? Well, we can say with some certainty, let's see here how much of a drop it would be. It would be a 3% drop. Can it happen? It can happen. Let's not put it now. So if at the end of the day, so tonight, okay, if tomorrow starting 1 a.m. in the morning Paris local time, so UTC +1, if we open above this here, above this level, above 23,020, if we open Monday above $23,020, we will have a new daily level that will be here, a new pivot, a new support where the price can drop towards it, create some accumulation, and then go back up. Okay, so let's keep it in mind, but let's not put it for now. Do we have lower? Yes, we do. We have one right there. So let's mark it down. And what I like about this one, it's that it's at the lows of this mini range, right? So this is a good level. This is a key level to have in mind, in my opinion. Should you lose this daily level, it means that you lost this range, you're back into the value area of the whole range since June 2022. So this could be your line in the sand saying, okay, this might look bearish if we go under 2,600, okay? What do we have here? We have lots of daily levels here, like lots of them. I'm gonna mark them all, and I'm gonna keep the ones that have the most confluences, okay? Because it makes no sense to have all this marked down. Look at that. Look at all those levels that we have right there. We are creating lots of support, but you can see something straight away. It's that here, you have nothing. This whole area right there is empty of a support. And you could have the same reaction here, right? Should you lose this range right there? Okay. This here is an empty support area. What does that mean? It means that if we start to see a weakness in the chart, if we start rejecting from one of those interesting setups that we have higher, like this one or this one even higher, this could drop very fast. This could drop super fast because we haven't created any support. So basically what you could have in mind right now is to think, if we lose this daily level, this 2600, we have a potential drop of 18% until the next big area of support, which is the 16, 17K area. So this is something to keep in mind, right? And this is why you don't want to buy in this area. In this area, you want to look for shorts just in case we start dropping. But yeah, with all those levels, what we can see for now is that you have areas that are completely empty in terms of supports. Here there's nothing. Here there's nothing. It's important to note. So let's mark this. Those are the daily levels. Do you agree, Pierre, on this? Do you have the same view?
Yeah, the daily level, the last one that we are gonna put today,
yeah,
is a 4-day support.
This
if
one
you
here?
take a look at it, yeah.
Oh, that's true.
See?
That's interesting.
So yeah,
yeah,
that's a great daily.
And actually, it was created. Look at that. Here, you created a resistance. You went above it. You created a support. Okay, it was traded again, but it resisted as a support, and then we drop, and then now we're going back up, and so now we're creating a support a bit above. So this is actually going to be a key level of support. Should we open the next day above it, this level, you don't want to see this level lost. Should you see this level lost, it could be the first big sign of weakness. Okay.
Yeah.
Okay. But
yeah, to me too. Yeah.
But it doesn't mean that you're invalidating the uptrend. Remember,
the uptrend, no.
The uptrend is doing this. Okay? What is that? Higher highs, higher lows. And actually the end is not like that. The end is still like that. Okay? So until, let me do it again. Okay. Until we actually lose this series of lows here, for me the uptrend is really not invalidated. Okay, so this daily level is very key because it gives you like the first red flag. Okay, we lost this level, maybe it's not that bullish anymore, and maybe we can start dropping towards the next key level, which is this daily level here. Now, should you lose this daily level, it means that basically you'd be doing something like that. Okay, and now you're creating quite the opposite. You had a strong market structure to the upside, so a bullish market structure. So you start losing those levels, you're actually probably creating a bearish market structure. And as we told you, those areas are completely empty of support. So you can drop very fast. So it's important to have in your mind those key levels, those lines in the sand. Okay, I can see on the daily level that we're actually starting to reject from our setup. I mean, this is pretty cool. It's not the one. Where is it, by the way? Oh yeah, this is the one, but it's just that we removed everything. That was we had the red box here, and we had the naked weekly setup. We just ladder into this short. Okay. And I wanted to say something. I wanted to make sure that we keep only the good daily levels below. So how do we do this? Because we have so many daily levels, this is not going to help us when we arrive here. Okay. So what you want to do here is you want to add a bit of confluence to those levels. How do you do that? Well, very easily. You have a range, right? So you just pull your fixed range pool. So the range started here, right? So let's go from here towards there. And let's see which daily level seems to be the strongest one. In my opinion, that's the one right there. Okay? Because you have the point of control that's right on it. So you have the point of control of this mini range. Actually, not that mini because it started on the 10th of November and we exploded in January. So it's like a 2-month-old range. The biggest point of control, the biggest volume level is here. You have, now that I'm seeing it, you have another important volume level here. Okay, do you see it right there? This is why you pull them. So you have a point of control that is here, and you have a high volume node that is here. So this high volume node is aligned with this daily level, so I would keep this one. Okay. This daily level here is quite alone. I'm going to remove it. This one here, I don't really like it. There's nothing in it. Okay. It's, I mean, should we arrive to $16,600 and $60, I think we could drop to the point of control. So I'm going to remove it as well. And let's keep it clean. Okay. I'm going to keep this daily level because of this liquidity below. I like that. And this is like the ultimate daily level that we have to the low side, which is 15,700. Okay. And that's how you actually keep like the key levels in mind. Yeah. What is that? That's a daily level that we haven't created yet. So let's keep it here. Okay. So now that we have done this, so where are we now? This is the question that you should ask yourself. Where are we now? Okay. We are in this range, right? It's the same range that we've had since June last year. We're inside of this range. So as soon as you see this, the first idea that you should have is, okay, where are the key volume levels of this range? Where are the biggest, the biggest levels where you could take trade setups with more confidence, because you know that those levels provide bounces once they are hit, especially the first time. So here what you want to do is actually pull a volume profile of this range. So you start it here. So let's see, where should we start it? Personally, I would start it to this first green candle, okay? Because here we were dropping, and then the first daily green candle. So because it's such a high time frame, I'm going to keep the daily level, and I'm going to use this green candle as the first candle that formed the range in which we are in. And the last candle is where we are now, okay?
This is how you put a fixed range.
And this is how you put a fixed range. We should definitely make a video on that, because I'm sure some people would love it. But this is how you pull a fixed range pool, okay? Now it's very easy for us to see them because we've been doing this for such a long time, sorry. So long, yeah. But this is like the way to pull a fixed range pool. Let's do another one. This is a range, right? Where would you pull it? You see this drop, first green candle, you take your first pull from here, and then you can either take it to here, or even this one. Even inside here, for me, we're inside of the range. And this is how you pull your fixed range pool for this area, this range. Okay? It's very easy. Once you get the hang of it, you know how to do it. Okay? We will do a specific stream about it, and we will explain how we do it exactly. And we will go more into details, but yeah, basically this is how you do it. So we have our fixed range pool of this range. Let's mark our levels. Here is the value area high. Let's mark it down. Okay. And for the people who don't know, the fixed range is basically telling you that inside of the area where you pulled your fixed range, 70% of the transactions in terms of volume occurred inside of this value. Okay, so inside of this highlighted area. Everything above and below represent only 30% of the price action in terms of volume. And this is very important because you want to have those levels in mind. Volume levels are key in our strategy, in our trading strategy. So this is why you want to put those fixed range pools, okay? And of course, the point of control, for those who don't know, which is the highest volume level in the whole range. So this is where people open most of their transactions. It's inside of this range, at 19,171. Okay? So people got it right. People here opened long and went up, but people got it wrong. People opened shorts here and they're wrong. And now they're underwater. And why is this level important? Because whenever it gets visited again, you can expect some kind of a reaction from those people who haven't closed their shorts yet. So you need to have those levels in mind. Okay, so now that we have done this, do we have any kind of confluence with our pivots? With the daily, no. With the weekly, we don't have anything, to be fair. With the monthly level, not really. Okay, and anyway, we are above this value area right now. So this is something else that you could add to your like line in the sand kind of level is, okay, should we lose this daily level that is not yet formed at 23,021? Should you lose it? And should you gain acceptance below this value area high, so basically going back inside of this range, then you can start thinking, okay, maybe I want to open a short on a retracement so that I'm covered should the price drop, from here towards the next volume level, which is the point of control. So you want to be covered in case of a drop of 15% basically. But since we're here now, there's no need to think that we're going to the point of control. But should you see some kind of a price action that loses this daily, back test it, test this value area high just above it, and then loses it and backs test it, here it would not be a bad idea to open a short, put your stop loss below this high, above this high or this high, because there is the possibility to drop. Okay? Now, I'm not saying this is what's gonna happen. I'm just saying that this is how personally I would trade it. I would also keep in mind something is that we have a series of lows right there. Okay? And I know that the price is attracted to those lows that were not challenged. So an interesting thing could be to actually go to this daily, lose it, this value area high, lose it, take the lows below this level, okay, and then start pumping again. Okay, so what does it mean? It means that this area is going to be a take profit area for me, because I know that there's a swing failure pattern that can be played here. Okay, and this is how you put the odds on your side. It's that, okay, you know that there is a potential short that could work out, but at the same time you're in an uptrend. Nothing has shown you yet that the uptrend is invalidated, and you took the lows, so probably if you open a long, you're trading with the trend, you're going to be a winner here. So at least take profit on your short here. It's like a little golden nugget given like that. Okay, so we have our volume levels. We know that the value area high is going to be a key level. The next is going to be the point of control. Let's see, let's add a bit of Fibonacci here to see if maybe the point of control has something nice to offer. It actually has. Now the value area low is exactly on the 618, so that's very cool to see. Okay, so just from that you can say that this is going to be your first big area of support right there. Okay, should you drop, should you start dropping from here, okay, and losing those key levels that we have in mind and going below those lows and not having this move up, okay, and you drop, this could be your target right there. And this is where you could actually even open a nice long setup, in my opinion.
If you put it from the start of the impulse, you get it on the point of control.
Okay, so important as well what you just said. So the Fibonacci, how do you pull it? So again, we will have to do a video and educative content of how do you pull Fibonacci levels. The idea is not to do it now, but we will teach this, no worries. The idea is to think, okay, the best way to pull those levels is to take the most important pivots on the chart. So here is the low of this whole range, and this is currently the high of this uptrend. So it makes sense to use those two pivots from here to here. The 618, so 61.8% retracement is in this area. Now what Pierre is talking about is if you want to take only the impulsive move. So you don't want to see what happened before this, which was a range. You want to see what happens once you started creating this impulsive move with, you see higher lows, higher lows, higher lows, and then bam, you explode to the upside. And if you actually pull it that way, the point of control is exactly on the 618. Pierre is right. Okay, so it adds also to this confluence of this area. And look how this box is now perfect. So the top of the box is the point of control and the 618. Okay, so this is an area that could act as a support. Another thing that I would add is that we went straight through the point of control to the upside. You can expect a bounce on it once we revisit it from the other side. This is something that happens a lot. It's when the level is disrespected totally, especially such a strong level, you can expect on the other side, once it's tested as a support in this case, you can expect a bounce because now it turned into a very big support area. So 19 to 100, to 18,500, it's kind of a big area, but it's important to note. This is a support area. This is where you look for longs or you take profits from your shorts. Okay. Now, do we have other interesting things? You have the 0.5 that's below those series of lows, but we're not there yet. Should we put it like that? Yeah. Another interesting thing that you want to do is you want to pull a Fibonacci retracement to see if you lost the 382, because this is also a nice indicator to know whether the move is strong or not. If the retracement that you have since you hit a high is lower, it didn't retrace to the 382, or it retraced to the 382 and then it bounced off of it and we made a new high, this is a strong impulsive move. Okay, so we can do the example here. So we hit this pivot right there. Okay, and let's take just the impulsive pivot. Okay, from here to here we rejected towards this area way above the 382. Okay, now let's see from this area right there, again way above this. Are we even above the 236? We're even above it. This is a very strong uptrend. I mean, from a Fibonacci perspective, every retracement that we're given, we're so close to the high that was put in previously that you can't even call those like big retracements. I'm not sure many people enter longs in those areas, you know. They're expecting a bigger
maybe
retracement.
As a range trader.
Yeah, of course.
It goes range explosion, range explosion.
Exactly. If you're trading as a scalp trader or range trade or day-to-day trade, of course you have many longs to take here, many longs to take here. But if you're a swing trader and you see this, your first idea is to say, okay, where is the 618? The 618 is at 19,200-ish. Okay, we are so far away from this, and we never actually came back to backtest the point of control. So all the swing traders that missed the low here, because let's be fair, it's a double bottom, so many people might have lost it, thinking that okay, we could go below it. So many people, I think, are on the lines, the sidelines, and they're not positioned in longs. And maybe this could be an explanation why we're going up so far and so fast. Those people are not entering into this uptrend, so they're seeing the price going up without them. Okay, and this is something to factor in also in your reflection, to know that okay, many people are waiting for this retracement and it's not happening, so it can even go higher, just as a Max Pain scenario type of price action. So we were saying that we're above the value area high, we are in an uptrend that is totally intact. The next key level that we have to the upside is the weekly level at 24,300. The biggest support area that we have is the point of control, but we're very far away from that. Okay, and what would be the best short opportunity inside of this range? Let's give us like 30 seconds to think about it.
30 seconds. It's long.
10 seconds.
Okay.
Personally, I know.
I know too.
Yeah. The best place to take a short here. I mean, some could argue that here already now could be an interesting short because we took the highs and we dropped, but the best place would be the top of the range. Okay. So you need to mark it down. You need to have this here, this level marked, for so many reasons. It was the exact low of this range. Okay. Back tested to the dollar, it was the perfect resistance. Should you see a move above it, lose it, and then start dropping, this is going to be a very cool short to take. Now, there's one thing that you have to keep in mind, as usual. It's this right there. We drop very fast, so should we start gaining acceptance here, you don't want to short anymore, okay? This is not the scenario where we want to short. This is the scenario where you think to yourself, okay, we're breaking out because we backtested the level as a support, and now we can go super fast toward the next area of resistance, which is this weekly level and the point of control of this area, okay? So Keep in mind that this could happen, but right now this did not happen yet. We didn't even visit the level. So let's keep it as a potential SFP level. I would call it a key level, okay? I would say high of the range, and I would call it a key level, okay? And this is what, personally, this is my target for this whole move, is seeing what happens here. And if I see the reaction that I like, and I'm talking about this kind of reaction, I will probably enter either after losing the level or after backtesting the level. I would have two triggers, okay? I would not open on the move up because I wouldn't be very confident in thinking that this is the top at the moment when the momentum is up. But as soon as I start seeing a weakness and seeing that, okay, the downtrend is starting to form at least locally, I could enter a short here, potentially with a stop loss above this, and why not take it to the lows? And you're talking about a trade. So if you take it to the value area low, it's already a 25% trade. And should you take it to the lows of the range, because you're shorting the highs, so you're expecting it to go to the lows, it's a 40% trade. Amazing. Amazing trade to take. Okay? So that would be the best setup in my mind for, let's say, the week to come. Okay? Now, let's put it down like that. So basically it would look like that. Okay, and this, I think we had it already last time, right? Yeah, we had it already. See? It's the same trade that we've been expecting at least since last week. This is the one, okay? This is going to be a very, very interesting short setup, right? Now we are basically trying this short setup. We already hit one of the levels and look at how we rejected from it, okay? So the level was a bit above it. It was a front run, but for me it was a hit. And we already rejected and we took the previous high and we're now below it. So this could create a rotation towards the lows of this range. Anyway, I told you I'm positioned in the short. I know Pierre is positioned in the short as well, just in case it drops. We're not giving too much strength to this short because we know that we're shorting in an uptrend locally, and an uptrend on the, let's be fair, on the high time frame level now. But because of the possibility of the big drop that we have below us, I think it's interesting to position yourself in a short trade. It's not a bad idea, you know. And if you lose like a small percentage, because right now the stop loss is at entry, so actually you don't lose anything, to be fair. Okay. So this setup, we have this setup here. So this one is at 25. So the exact level to the dollar would be 25,211. 25,211 is the high that is going to be a key level for me. Okay. Before that, we have the weekly level at 24,297, which is interesting. Should we hit it and see a reaction, this could also provide a nice short setup. And now we're rejecting from this naked point of control, weekly point of control. And by saying this, I think I'm going to add them now. So this is the volume profile. Yeah. Not with this one though. Okay. Okay, great. Let's remove that. And then let's go to our exo chart. Let's do it. I hope you guys are following and that it's clear enough. If you have any questions, just ask. And yeah, if not, if everything is clear, that's amazing. So let's go to our favorite order flow software. What do we have here? Let's go to the daily volume profile levels. Okay. So do we have any naked daily points of control? We have some, but below. So let's mark them down. 2,937. Wow, that's low. Okay, that's the one. So right there, here you have a naked point of control, okay? And we have another one that is a bit below 2762. 2762. Okay, let me do it manually. Okay. So we have two naked points of control here. Are they aligned with the daily level? Ah, that's very cool. It's very cool. Let me remove this one because it's close. Okay. We're really building a case for this intra trend support level. I'm really liking this. Do we have something lower? Yeah, oh wow. So many naked points of control. I'm not gonna mark them all. But I just want to see if we have additional confluence in our favorite area, and we do. Yeah. This one, 16,512. Okay. And this one, 16,337. So let's mark the 16,512. Okay, a bit of a lag here. Such a cool area. Such an amazing area. This is, wow. Should we get this? This is going to be so cool to trade. Okay. What is that? Is that the... oh, that's the daily level that we don't have yet. Let's remove it for now. And those are the naked point of control. Let's put it in a folder. Okay, let's go now. So the lowest one is at 437. What do we have at 437? Yeah, it's nothing really. I prefer the one that we have now. Okay, and everything above it is just, yeah, we created so much support, but we already know which support area is the favorite one. Okay. So no need to overcrowd our chart. And now what we want to see is the weekly. Let's put it here. Let's see the weekly naked point of controls. Okay. I did not check the Discord. Do we have any questions on the Discord or anything? Can you expand on why we took a short here even though we didn't touch the weekly target? Okay. Yes, I will explain it to you, and I will explain it to you now. You will see why. Okay. I took a short because of this here. Okay. So this level here is a naked weekly point of control. So it's quite a high time frame level, and it's 23,987. Let's mark it down. 23 9. Oh god, I'm gonna have to mark it down here. 987. Okay. Now, why is this level important? Hey, look at the respect of that. That's crazy. Okay, on the weekly level, it's touched. Okay, it really is considered as a touch level. Like you don't really need to zoom in. Okay. Now, if you go a bit lower, like on the 1 hour time frame, you could think to yourself, this is front run. But the front run is so close that as soon as I saw the reaction, I decided to enter. Yeah, this is, you're talking about less 0.08%. It's nothing. So basically the top was at the top of the move currently was at 967, and our level was $20 above. Okay, so once I saw this reaction and I saw the possibility of dropping because of a weekend price action, I thought to myself, this is a front run that actually might provide a nice reaction. Invalidation is very easy. It's right above it. Okay, so I enter around this area, and I don't want it to be exactly 24, so I just put 24.20. Okay, let me just show you. And the confirmation that I really liked was going below those lows, those highs. Okay, let's see if we didn't have any other highs. No, I mean, there was this high, but I mean specifically this high right there. Okay, as soon as you saw that you go here, you front run this level of resistance, this high time frame level of resistance during a weekend, and then you drop below this previous high, you have to think in your mind SFP potential. SFP potential means dropping back inside of this range. So this was a very opportunistic short. It wasn't a short where I'm 100% sure it's going to work, but it's a short that I took thinking to myself, this could be the potential high. I'm going to take a little position in it, and I'm going to trade it as such with a first take profit at 0.7%. So from my entry, because this is like where I want to take money out, okay, in this area. Now we hit this level already, we're below it, and I put my stop loss at entry. So whatever happens, this trade is a winning trade now. I don't have to care about what happens next, okay? So this is the reason why we took this trade. Now, of course, the better trade for me would be a bit above. Like if we start doing this, reclaim this, and then start losing it, I would love to enter here, okay? After seeing some kind of a rejection. But honestly, if I start seeing this, and then a back test here, I'm not going to enter short. I'm going to expect the highs of the range that are right there. So you need to be prepared to all kind of scenarios. This is how you're going to be on top of the game. Okay. Now, what were we saying? We were putting on the naked weekly points of control. So we have one at 23,987. Very quickly, a naked point of control is a point of control of a period of time that was not backtested, where there is liquidity that's resting and it was not backtested. So meaning people have entered the wrong trade at this local point of control, okay, and they're underwater and they're expecting this level to be hit again so they can get out of their position and so provide a bounce should you visit the level again. This is a weekly naked point of control. So a week of price action point of control where people probably got into longs here, got it wrong, and now we're hitting it back again. What happens? We front run the level and people are already unloading those longs that were underwater. This is why it's an important level to have on your chart. A naked daily point of control is going to be for a day, and a monthly for a month. The higher you go in time frame, and the bigger the level is going to be, and the bigger the bounce could be also. Okay, this is like the very short version of what is a naked point of control. And we will do also a stream about it, like an educative stream about it. This is planned. Now to the low side, what do we have? We have a weekly naked point of control right there, 21,137. So let's mark it down again. $21,137. Oh my God, sorry. 2137, where is it? It's here. Okay, it's a bit above. It's a bit alone, to be fair. But we will see if we have any kind of interesting confluences here. It is a big, I mean, you can see it on this volume profile. It's a big point of control area, right? So it's a level that you want to have marked on your chart. And then the lowest one at 16,812. So where does that go? Wow. On the daily level. Look at this area. This area is crowded with support. And we actually removed some daily levels because it was already overcrowded and still overcrowded. This is a big support area. You need to be aware of that. This 16,800 to 16,500 is Super, super cool as a support area. You need to know that. To the upside. So let's say we start reclaiming this one. The next naked point of control, and look how cool it is. It's the previous range. Is going to be at 3062. Wow, we're talking about 30,000 levels. 3062. Where is that? No, that's just art. Right next to the weekly pivot. So, Pierre is also telling me something interesting. It's that, yeah, not so you see this pocket right there. It's also aligned with the yearly open. So we started the year basically at this support area, and we created all those kind of supports in the beginning of the year, and now we're completely above it. Should we revisit it again? That's also an additional confluence. Okay, now personally, yearly open, I mean, time frame is so high that I wouldn't even know how to trade it, but I love to see it in confluence with our levels. Okay, now should we start losing this? But I mean, to be fair, if you lose this and this, and you arrive here, already at this point you have to start feeling a bit bearish, right? You gotta think to yourself, okay, we tried to move up and we got so heavily rejected. We're inside this range and we're at the lows of the range, and we have this liquidity that's staring at us in the eyes, right? So you have to think to yourself, okay, if you lose this support, it becomes an amazing resistance and you're going lower. So bearish. We're not there yet, so no need to ring any kind of alarms, okay? We were on the weekly, we were putting naked point of controls, and let's see, so the lowest one is here, the highest one is here, and then you have another one here at, Jesus Christ, at 35. Damn. Damn, I wish we could go to those levels. That would be so cool. Okay. So I think we have our levels, right? We have everything we need to trade the next week. And it's, when you put it that way, it's pretty easy to see and to understand. Okay, so the next level that you should have in mind is this weekly and weekly naked point of control. We already hit the naked point of control for me. We can still go higher and hit this weekly pivot and reject from it. So first area of resistance that you have right above us is here, and we are at it. And we need to reclaim this if we want to see higher levels, which makes sense. The next big level of resistance is going to be this one. Okay. And should you reclaim this, I am seeing a pump towards the 30K. 25K is the line in the sand before a big pump of, 20%, 20 additional percent, because there is nothing here. Nothing. So, two resistance to break above. Should we break them? We change the market structure on the high time frame because we took all those previous highs. We're above it. If you backtest this level as a support and you take the highs again, brace yourself for a pump of a 20% towards the 30K region. I'm telling you from now, this could happen. Mark it now on your charts. Okay? To the downside, I'm just summarizing all those levels. Okay? To the downside, if we start losing this monthly, which is a key level, 23,300, okay? Let's go on the 4-hour time frame. Yeah. Should you start losing this level here, for me, I would expect at least a rotation towards the lows of the range. So if you start seeing this, expect a rotation towards here, okay? Now here, you will have two different kind of possibilities. Either you swing the lows and then you start pumping again, okay? Swing failure pattern of the lows of this range. This is a bullish pattern, you take the trade. Or you can drop lower towards where? This area, this range, and where? This juicy area of support. Keeping in mind also that you have a series of lows right there that can be challenged, okay? So the ultimate best trade setup, best long setup that I have in mind, and you wouldn't drop too much and could happen next week, would be basically this. Take out those lows, obviously, and then you start pumping again. This doesn't invalidate this uptrend for me. It just creates another low, a higher low, and then you go back higher, okay? High, low, again a higher low, okay? So yeah, the best setup I would have in mind would be this one. Let me now mark them down very fast, and then we can go to the ES so we can start seeing what is the ES doing, because the future is going to be opening tonight. So we need to be aware. So this would be basically the long of the swing failure pattern, okay? This is less of a swing trade and more of an intraday trade, okay? If you're not comfortable in taking longs here, which I could understand, don't do it. But this is the first long setup that I would have in mind. And the second one would be around this area right there, okay? Now the naked weekly point of control could be the area. By the way, let's do that. Let's just check this out very fast. Yeah, this could be the area, to be fair, especially if we add that, which we haven't done yet. So what do we have here? We have the highs that are aligned with the 618. So this could also be an interesting area, but I'm not that sure anymore. After seeing all those juicy levels, for me, this would be the best one. Yeah, this would be the best opportunity, the best long. This is where you could compound your long setup and then take it to the next level. Okay. So yeah, I would keep in mind those two very, very cool longs. The short setups we just gave them, okay, 24k and higher, 25k to 100, and that's it. That's all you need for next week, in my opinion. That's what you need. Let's go on the S&P now to understand what happened on the S&P. So if we go on the monthly level, we just tested this monthly level right there. Okay, there was a weekly that was created here that we seem to have back tested, and we have a monthly level as well that is going to be created in a few days right there. So it's going to recreate this weekly level. Let's remove it. Let's put it right there. That's going to be a monthly level here. Okay. So what we can say about the ES, to be very fast and not lose too much time, is that, let's go on the daily maybe, is that the ES for now is ranging inside of this area, okay? This is what I'm seeing for now. To keep it very simple, you want to keep it simple, okay? ES is ranging now, okay? In terms of volume profile, where are we? We are at the value area, we are at resistance, value area high of this range. Monthly level, okay? Yeah, you are at resistance. You have to be aware of that. And I'm sure that if we put this on, okay, we're actually even above that. Are we above the 786? No, we're not. Okay. In terms of Fibonacci, we're even above the 618 golden pocket. Okay. So, yes, the levels that I have on my mind is where we are right now. Okay. If tonight, when we open the future, the S&P future, the S&P mini future, the ES, when it opens tonight, if I start to see a rejection here, I wouldn't be surprised, and I would want to see also the rejection on the Bitcoin, okay, because I like to see the correlation on both assets, keeping in mind that this point of control could provide a bounce right there. This is a key level, okay? Should we break above this, if we open in a bullish way tonight, the next level that I have in mind is this one. And this one is a crazy, crazy level to have in mind. 618 of the whole drop, okay, since 1 year now. You have a weekly level. You have a very key high around here. So I would definitely put alerts at 4,283. Starting from this level. 4,281, sorry, 81 towards 4,360, okay? This area is the biggest resistance to claim on the futures. Why? Because if you claim this and you backtest it, you took the previous high and you would be making basically high, low, higher, higher low, and you are now back in an uptrend in a very bullish market And you can think to yourself, okay, let's go take the previous highs because we changed the market structure again. So that's why this is a very key resistance. And you can be sure that all the traders are looking at that. Okay, so let's keep it simple. Those are the levels that I would have in mind. To the lower side, let's do the exact same thing. Should we start dropping? Okay. To the lower side, we have this weekly level that I like a lot, aligned with the value area low, with those series of lows here. Okay. So I would love to see something like that. So should we open here bearishly, we can drop towards this area, take those lows, and then go back higher and take the highs again. Not invalidating the little uptrend that we have inside of this range. So that would be cool because this would make the Bitcoin also drop. Okay, we need to see where Bitcoin would drop, but this would make Bitcoin go a bit bearish for next week. Maybe allow us to compound along at those juicy levels that we talked about, and then rise again and take the previous highs. So we have all the scenario covers. Should we pump? Sorry, we know where's the next area of resistance. We are currently at resistance, so we can expect a rejection tonight. And if the rejection occur, this is the next area of support, in my opinion, below this monthly level. I would keep in mind this monthly level too, okay, because of something very easy that I'm seeing right now, which is that. Yeah, okay. Again, fixed range pool. Very, very easy tool, so strong. There's a range here. We have a volume, the point of control of the range right there. And what is it aligned with? The monthly level. Very strong level here, okay? So actually, even before this level, I would actually have this one in mind. This monthly level at 3861 would be the first support to expect, okay? So let's clean up everything. So here, first support, second support. Should you lose all that, we're going to those lows. As easy as that. Okay? Pierre, do you have something you want to add?
No, everything is great.
Yeah? So yeah,
Yeah.
trade it that way. It's that wait to see how the market open, how the S&P futures open, okay? So you can see it's the index is called ES1, okay? The ES1 mini. See how it opens. If we have like the continuity of this uptrend, you know where the next area of resistance is. And should you start dropping, you know where are the two key areas of support technically. And this is where you want Bitcoin to be if you want to open a long as well on Bitcoin, okay? Let's see what's happening here. Yeah, no weakness so far. Like really, Bitcoin is very, very strong. There's nothing to say about it. This I'm really expecting this short to be stopped out pretty soon. Okay. So do we have any additional questions? Maybe anything that came through, or I answered to the one previously.
Yeah.
Okay.
You must be pretty clear. We don't have any questions.
I think it's clear, guys. If you're shy or anything, please don't be. Just ask any kind of questions, and we're here to answer them. I think it's pretty clear what we're expecting on Bitcoin next week. Make sure that you're tuned in the Discord because we're going to be covering the price action pretty closely, especially in that we're arriving to those key levels. And yeah, thank you again for joining. I hope it was interesting. I hope it was educative at least. And I guess we'll see you next week in the Discord. Bye bye. See you guys.
Bye bye.